In the last financial year 2021-22, Indian mutual fund companies have launched more than 140 new fund offers. They were able to garner close to 1 lakh crore in investments from Indian mutual fund investors. And if you as a mutual fund distributors have not chosen to participate in NFOs, then this video is for you. I'm going to tell you why NFOs are so successful in Indian market, and you as a mutual fund distributor, what all things you need to keep in mind whenever you are deciding to promote any mutual fund schemes to your client. Hello everyone, I'm Shobhit. I'm a Finvest Growth expert and founder of Finvest Growth Club. We are an aspiring community of new age mutual fund distributors who are determined to change how India invests. So first, let's talk about what are the buying triggers which is making NFOs or new fund offers launched by various mutual fund companies so successful in Indian mutual fund industry. So first and very obvious thing which I think is the conception that mutual fund NFOs are a cheap buy. So if you know, most of the mutual fund schemes, new schemes which comes into the market, they are launched with the face value of rupees 10. And thereon those NAVs will keep on appreciating depending upon the portfolio appreciation. So 10 rupees is considered to be a cheap investment buy, and that's why it creates lot of hype into the market that instead of buying those funds which are there in the market for last 10 years, 15 years, 20 years, and those who are able to take their NAVs to 100 rupees, 200 rupees, 300 rupees, instead of buying those investments, it is better to buy a portfolio where the NAV is 10 rupees. Now it may be or it may not be true, but it is working on the psyche of Indian investors. Most of the advisor community are taking this argument to their clients that they're getting cheap units or more number of units for their investments. Especially it is true for those investors who are looking for a dividend payout option or a regular income. So if you're buying a unit at 10 rupees instead of buying a unit at say 15 rupees, 20 rupees or 100 rupees, obviously you are going to get more number of units, and if you are going to get more number of units, then the dividend payouts which you are going to get would be much higher. But you need to remember that the amount of dividends which you are going to receive in your bank account as a mutual fund investor is directly proportional to the number of units which you are holding. So if you are having more units, and that is going to translate into the NAV of a particular mutual fund scheme. So if NAV is low, if you are buying now, then you are going to get more units. And if you are going to get more units, then you are going to receive higher dividends whenever the scheme is going to publish it. So that is the first thing I think that is working well for Indian investor. Other important thing is that lot of new concepts with which the new schemes are being launched. So SEBI has mandated that you cannot have a same category scheme in the one fund house. So if you have a large cap fund, you cannot have multiple large cap fund and so on and so forth. So whenever a new NFO is going to come into the market, they should be catering to a new industry, new theme or new parameters. So there is something unique always whenever a new NFO comes. It may be catering to new sector, new industry, upcoming opportunity, and that is going to be a very good way to lure new customer or existing customer to invest in. So the uniqueness of the product which most of the mutual fund industry players are launching, that is also working well for them. And please remember, as I told you, SEBI has mandated that you cannot have a same scheme under the same category. So whenever the mutual fund company is going to launch any new scheme, they need to have a new structure or new way to build that portfolio. And we always love to buy new. It's not so. Whether it is a cloth, it is a watch, it is a car, we want to get a new one. So if something is brand new, it is always going to work for us. Same way, whenever we want to look for any investment, it is always a new thing, a new scheme which is going to be working for us. And last and most important thing why NFOs is working in Indian industry is because of the marketing effort which the mutual fund companies are putting in. So any new scheme which is being launched, special emphasis is put to put lot of media buying or put lot of attention into the marketing of the NFOs. So you are going to find advertisement on TVs, news channels, newspapers, and that is also working very well for Indian investors because more visibility means more knowledge, more attention, and that is going to be translated into better conversion into new mutual fund schemes. So I think these are the all factors which is working very well for Indian investors to put their money into new fund offers. And if you as a mutual fund distributor, if you are shying away from participating in NFOs, I think you are losing a big opportunity to beef up your portfolio. Now, if you are convinced that you need to be participating in NFOs and you need to advise your client for NFOs, then let me tell you what all things you need to be keeping in mind to shortlist any NFO which you are going to promote to your clients. So the first and very obvious thing is it should have a very unique proposition to sell. It should not be in the same thing which you are already proposing to your client. Uniqueness is going to be helping you as well as your client. You, because client is going to see that you are going to offer some new value proposition to your client. So to name a few which recent NFOs which have come, recently Edelweiss has launched an IPO NFO. So any company which is coming with the IPOs, they are going to invest in those companies, and that is also a very new theme to work upon. Then there is a recent fund from Navy Mutual Fund regarding IoT, that is Internet of Things. So any company which is related to IoTs, there they are going to invest. So these are very unique themes which has not been explored by most of the mutual fund players. And this uniqueness, if you are going to take it to your client is going to appreciate and definitely going to give some consideration to invest in those unique ideas. Other thing which you need to look into it, in case any product is missing under your advisory portfolio, you need to definitely look into it. Now what this means? This means that you need to keep in mind that if you are not having any unique product in your advisory basket, it may be a sectorial fund or a new thematic fund which you are not proposing to your client, definitely you should be looking into. Other important factor which I want you guys to consider is to always consider the importance of fund manager. How to choose a fund manager, that I have done a video on. I want you guys to look into. I am going to leave the link here. But importantly, fund managers are going to play a very vital role. Since we are investing in a scheme which do not have any track record, we need to definitely look into the fund manager's track record, because that guy is going to manage the money. So look into what kind of funds they are managing, what is the history of those funds, how risky or volatile those investments are, what kind of standard deviation or Sharpe ratios those funds have, because those is going to give a very substantial inputs as how these funds are going to be working. Other important thing is the fund manager's style of managing schemes is also going to speak a lot about how these funds are going to be managed. I would highly recommend that whenever you are shortlisting any NFOs to advise to your client, style purity is very, very important. Whatever is the investment objective, if the fund manager is able to stick to this investment objective in the previous funds which he has been managing, I think that is a good fund to promote in. And last but not least, I would love you guys to look into the fund house which has launched this scheme. The lineage is very, very important, because if a fund house has a very process driven method to launch a fund, to manage a fund, and the schemes are managed well by that fund house, I think we should be betting on those NFOs launched by the mutual fund companies. So these are very critical parts of whenever you are going to pitch any new mutual fund schemes to your client. This is going to be important critical aspect. Please understand, whenever you are trying to pitch any new product to your client, you should always keep in mind that you should not be looked as a someone who is going to be encashing the opportunity of any new scheme coming into the market. You should not be promoting each and every new scheme which is coming into the market. You should be choosing in whatever NFOs which you would like to promote to your influence. Ideally, I would recommend once in a quarter is a good frequency to promote any new scheme. And please understand, I totally understand some of the fund managers or some of the fund expert advising that we should not be putting our money into the NFOs. But if it is going to be helping our investors, our customer to be more excited about their investments, if we are able to garner some money which they would have not put in their investment journey, I think there is nothing harm in that. If our intention is clear, we want to make money for our client, we want our clients to be more disciplined, we want our client to have a better financial future for themselves, and of course can work well. So in case you like this content, in case these insights would help you in creating some new strategies to build and beef up your investment advisory portfolio, I would love you guys to hit that thumbs up button. Subscribe to our channel so that whenever we have something new to offer, you guys will be the first one to know. Start working on your NFOs, and I am pretty sure that you guys are going to having a very good new financial year. Thank you very much for watching. I'm going to see you next time.